With a recent flash crash in gold, the commodity has dropped to its lowest price since about March, and now investors are growing wary about gold as an inflation hedge. According to J.C. Parets, AllStarCharts.com founder and chief strategist, gold's become one of the worst investments over the past year. Although there is every reason under the sun for gold to go up, apparently nobody wants those rocks. Even though institutions like Bank of America projected that gold's value could skyrocket to as much as $3,000 per ounce over the last year, gold seems to be one of the worst investments. With inflation reaching the highest level since 2008, gold prices have fallen over 16% in a year. That's down over $300 per ounce from the August 2020 peak of over $2,000 per ounce. In today's melt up market, one could have bought just about anything and it would have made money, but not gold. Look at the other commodities in the world. They're going up, but not gold. So, what is the future outlook for gold? Let's take a look. And now we're looking at a monthly chart of the Spiders Gold Trust. The symbol is GLD, and we're looking at GLD simply because this is one of the best proxies for gold. Now, as you can see, this chart has a nice top here, a very nice bottom and basing through here, and then a run up to this top there. The last time we talked about gold, I think it was late last year or early this year, where I said that it was going to come down. The price of GLD was going to come down and possibly bounce off of that 20 EMA on up, and we would look for a double top. But it didn't even get to that double top. It only got to this level here, but very similar to here. And this is what I was pointing to. Back here, we had the top, the move down, the bounce off of the 20 EMA on up here, and then a stall, a failure, and then the fall came all the way down through here. It took several years. So that's what I was concerned about in the recent formation here. So looking at this, just based on this history here, I think we have more downside in gold. But let's take a look at the oscillators. Volume, can't tell much, but certainly MAC is the telltale sign. From this top here, you could see that the fast line ran through the slow line. Down here, it made an attempt to move up, but it failed, got reflected back down here, and then it was on its multi-year bottom and basing through here. So, same thing, the top, we had the move down here. This was a very small attempt at a run up through that slow line, but it got reflected back. And now we're heading on the downside with acceleration on that fast line. That separation looks like it might be coming even wider than it is. So I think we still have lots of downside. So don't be in any hurry to buy GLD or gold. Here in the histogram, you can see pretty much the same thing with this very short attempt at a move on up, but it failed and on down. I think it has more downside to go. Down into the price rate of change, no sign of any bottom. Sawtoothing down here, hitting that zero line, and I think it goes below there. Into the relative strength index, we're at a very moderately weak 48.10, but I think we're going lower. This was that small attempt at a recovery, but it's failing, and it's going to be heading on down. And that's also shown here by the stochastics. The fast line and the slow line are already through that 50 or midline heading on down. And once you get here to the Williams, no surprise, we're down here. And I would imagine that we're going to get a spike on down here into that oversold territory. But it would be oversold, but I think it could stay down there for a while. I wouldn't say it's going to stay down there for multi-years as it did through this time frame, but we could be here for a while on the downside. Back on up to the MAC, one last look at that MAC, and as you can see, I think that it's got some elevation, but stock market gravity has definitely taken hold and is heading on down. Now back up to the price chart. One last look at this. So do yourself a favor. If you're interested in gold, don't listen to the pundits. They have other motives. Look at the charts. The charts will tell you the truth. And for today, that's ChewDog Charts. Thank you.